Well, good afternoon for some of you, and good morning from here in Canada. It's still 10 a.m. We just listened to Michael have his opportunity to talk to people and get a little rant on there at times, which is, typical Michael. And when he's had some time off, he likes to have a chance to let it all out. So I'm glad he got a chance to do that, and my best wishes are to him and his wife and his family during this very difficult time. So I just kind of want to, I'm not going to comment too much on what he was saying. I think some of the psychological stuff he gave out during that uh, presentation was awesome. I think that really resonates with a lot of people. Um, so despite everything he was saying, I'm going to kind of give you my slant on it, and that doesn't make mine better than Michael's. But this is pretty much when we're talking about the buffer and, these high resistance markets. Um, I'll kind of want to show you what we were looking for inside here when we saw this reversal happening. That buffer, when I talk about buffers, basically you're looking at opportunities to run to the rejection blocks and take some money off, or take your whole trade off in a high resistance market. And so if you were to trade to wait for a body to break, trade above here, which it does here, and you trade back into it. So if you had 1, 2, 3 entries here, you trade to your first fair value gap or your first rejection block. Pay yourself if it comes back in again. And you've seen me do this multiple times in the past, but this isn't to say that what Michael's advice was giving in any way, shape, or form was lacking this or anything like that. I just want to show you what typically I've been showing you guys as an opportunity in high resistance markets to keep capturing a little piece here and there. So it comes back down. So once you've come back up and once we've loaded on here and take out in your first one here, and we come back in and you load your 3 back in again, all 3 of them load on, you run back up into right there, your rejection block one more time. You come back in, load all 3 on again, come back up, rejection block. You come back in, you only get 1 on this time, and you're out at that rejection block there. Or if you're holding for your reversal pattern, so again, reversal to reversal. If you see this reversal happening here and it doesn't, you've taken out these highs and it doesn't form, you don't get a trade that trades below it and back into it for continuation. You wait for the next one. So like Michael was saying, it's all this engineered liquidity, all these people up here thinking this was resistance. Took them out one more time through here, and we have the reversal happening right here. So this is a reprice rebalance. It comes through, it comes back up, taps it for a short. So this is where you start to think going short. And if you're aiming for your first rejection block or wherever your goal is, you get out of a piece and then you wait for another cleaner setup to happen. So it ran all the way back down, cleaned out these lows here. We got on the other side of this. So when you start to see a body drop below this now this is where my idea for, or my thoughts for, we're probably going to go shorter from this point. We did get a nice retracement back into this fair value gap above us here, which is 50% of the range, which you'll see on the Telegram. I posted this on Telegram channel, the 50% retracement. Then we get the a new inversion happening here. We run these old highs, reversal happens, come back up, tap it, and you're running for your lows. So even though there was a lot of consolidation in here, a lot of high resistance, there was still moving from array to array constantly. If you keep watching on a minute by minute basis, it still stayed within the typical PD arrays that Michael teaches, if you were looking at those. Now, he mentioned this one here where as if it returns to this, he would get short if that was Not that you're going to trade that. I got in short off of this. Let's see where I got mine in a little long, earlier than that. Yeah, I was over here off of this. As soon as we break this low here, I loaded on the 2 from there. And took trades out here from this reversal. And that's the logic I was using. So it's not some just form-fitted thing. That was the logic I was using for these trades. And now these ones here. Just so you're kind of aware that I'm not copying Michael. But I did see some trades in here that made sense to me, even though they're high resistance. And I'm still looking for, I like this idea that Michael was mentioning down here, this fair value gap here, these lows, and then obviously I have an objective that's right back at this 1806. I've still been waiting for that for weeks now, so I guess I'm married to that idea. I've got 4 lots on, so I'll end up trying to take a piece off here like Michael was saying, and then I'll let the rest run. And I'll move my stop loss to break even. But I've got to get below this low first before I start pulling this down a little lower. So that's where I'm at. Don't know if anybody else is following us right now, but and I'll move my stop loss to break even. Okay, so there is a couple of people in here. Okay. So I'm always grateful for Michael's helping us out. Man, he had some real nuggets in there, which was an awesome thing. He does leave some excellent examples. And I really did like his what he was talking about in terms of the psychology. Morning, MF. And I really do appreciate the psychology that he was offering, because I think there's quite a few people out there that are like, I remember when I was first starting out doing some trading, it's like he was in the room in my head talking to me as he was describing some of the thoughts, that I'd be literally thinking something when a candle changed, and he'd be telling me what I'm thinking while I'm looking at that candle. That's how well I thoroughly believe he understands the psychology of people's trading. I have to say I don't agree with the fact that he thinks everybody else out there is full of shit, and that, you know, nobody cares about you. They are all worried about themselves, and your family doesn't care. They don't want you to succeed. They just want you. It's like, well, that may have been your opinion, man, because my family is definitely not that way. My family is full on support. And I know there are people out there, families, that don't want you to succeed. And, you know, it makes life so much more difficult for you. But I thoroughly believe that you can't use everyone. You can't use a universal quantifier like that. So I'm sorry, I don't agree with Michael that way. And I don't believe that there are people out here on the internet that don't give a shit about you, that everybody is out to get you, or I genuinely give a shit, and I want you to succeed. I haven't sold anything. I've been here every single day, whether you come in or whether you don't. I'm here to show you as much as what I know of the markets and how to trade. You either agree with it or don't agree with it. You move on, you don't move on. I'm not asking you for anything. So I genuinely want you to succeed, and if I can help you get there, then all the power to you. All the power to you, genuinely. So I don't agree. And even the people that he's helped create, all these, I've been with him since day one on his first mentorship. I love the guy. I promote the guy 100%. I recommend you go study all his material before you come here. I'm 100% committed to ICT, but I do not agree that everybody that's out there, because that means I'm one of his students, I'm one of the people that have put my thousands of hours in on the markets to try and do the best I can. I've made my thousands of trades and I've gone through the psychology of beating myself up. I've done all that stuff as well. And that doesn't make me any less valid just because he doesn't think that everybody out there is just out to screw him over and steal his stuff, which I think it's a shame that he feels that way, because there's genuinely his students that love the guy, and we're trying to do the best we can to put his stuff together and package it in a way that helps you guys, and it's for free. I'm not charging anybody for anything. Doesn't make me any less caring or concerned about your success. So anyway, that's just my belief about that. I love the guy dearly, but I don't fully support his universal quantifiers, his always, everything, forever philosophy. Thanks, MF. Appreciate that. I suppose I don't need Michael to validate my own belief about what it is that I do. I'm here. I think I'm here for the right reasons. I think I show you that I'm here for the right reasons. Whether or not people want to believe that, that's entirely up to them, I guess. But I think a guy who's got that much influence out there can seriously affect, because he's not on here every day. He's not sharing his stuff every day with people. And there are people that are hungry for his stuff. There are people that are hungry to learn and apply what he's been doing. And there are those of us who are dedicated to his material and dedicated to delivering or continuing to follow in his footsteps and do his work, that are genuinely trying to take up the mantle and help these people as best we can. And we're his students. We're people that have been through all the crap over the years. And so I do take kind of offense to like, hey man, I'm just here to try and promote you and your material. And I won't get it right. I won't get it right all the time either. But that definitely doesn't mean that I don't care about people. That definitely doesn't mean that whatever it is that I'm sharing is all bullshit. That doesn't matter. I'm still going to be here, whether people turn up or not. This is my video diary of my journey. You can be on it with me or not. Your choice. Stop about least ready charts. Sorry, I don't understand what you're saying there, follow. Stop about least ready charts. I'm not catching what you're trying to put down there. Follow. Okay, so retracted it. I really didn't want to see it retrace back up into this thing again, but we have this I wouldn't want to see it break this to the upside. That's where my fail-safe will go. If we break this to the upside and we start digging back into this again, I think I'll close that out. I would like to see this break to the downside, come back up inside here, and continue back down. Like Michael was saying, that the fear is that at lunchtime, we're just building more engineering liquidity here and then just run this out one more time before finally slamming it down. So if I don't start getting some I didn't like the fact that we had to return of it here one more time. So I'll give this a few more minutes to see. Look, definitely don't want it to get above here now. I'm going to close this out. This is when it will start to move. See, we've already broken this. We've swung here, reversal here. I would have closed it out anyway. Finally, a body breaks above it here. We're such a tight little consolidation right now. We'll keep our eye on this level here. So we have a swing. Body comes back up inside this. Doesn't quite capture this area here yet. So this is where you put your fail safe right here. So if we come up and we just clip this in here one more time, this is the reversal that I'm seeing. If we come up into here one more time and catch that, if we trade above it, come back to it, then I'll use the fail safe to get out at a break even. I can adjust my position inside here, or at least we're in a premium array or premium range inside here. I'm just kind of keeping an eye on this area right here. And if it continues to push through, then yeah, looking for Michael's idea of that may be the lunchtime run. as usual. It gives me a little kiss and then starts to react off of it. Make this a little bit bigger here. Okay, it's finally in there. Now I want to see it get right through here again, this little inversion here. This one's more important to me now. That's the rejection block. Not a good sign. I'm going to get out of there. It's going to keep pushing higher now. That's the reversal. Didn't get a chance to get in on that. So this one to this one would be your range. If you could have got in on that, you change from one discount to a premium. That would have been your exit right there. Now taking these highs, so now you want to see another fair value gap forming here. Just going to wait for that run above the lunchtime. Mean threshold of this candle. Just keeping an eye on that. So yeah, we're probably like he says, probably going to run that high out now for one more time during lunch. Order block body. That whole reversal thing starting all the way over again. See how we've run all the way through it, back, into it, below it, right up inside it now. We want to see this breaker give way. Or mitigation, I guess that is, because it didn't take this low out. We'll see how well that does off of this inversion. Look, follow, I appreciate your opinion, but don't tell me how to think. That's your opinion. You just sit in the you sit quietly on the sidelines. I'm allowed to tell you my opinion. If you don't like it, click off. Don't tell me what I'm supposed to think. Hello? Mm-hmm. Sorry about that. I had part of a sleep study, so I needed the needed to take that phone call. So here's the again, another reversal above. Look for this support here. So you're going to go from premium to discount. The ultimate one would be your stop loss goes here, or your entry goes right here, and you drag it down just a little bit so we don't just get kissed and left. Stop loss goes up here, and then the fail safe will kick in if we're wrong. And I'm just trading a model. If it runs, there's the kiss again. I pulled it down deliberately just a little bit to try and get in there. Sometimes they give it to me like a few seconds later. It takes them a while to finally say, yeah, okay, we'll give it to them. So look for this to continue down. Now we're getting a nice reaction off of this. You want to see that just start pushing through. Rejection block. You'll pay yourself a little bit there. Again, you're always trying to pay yourself, especially in this kind of consolidated market. Pay yourself at these rejection block, old low, then use your fib tool to pull it if you want to run. If you're going to pull your fib tool, trade your fib tool from, if you get 50%, move to break even, then 62. If you don't know how to use your PD arrays very well, you're not comfortable with PD arrays, then the fib tool is a great way for people to start out if you're not 100% about what PD arrays are what. So here's a breaker here. So look, pay yourself at that one there. This is just to try and show you guys that there's still trades to be made even inside these consolidations. If you look at from one array to the next array, like I agree with Michael, it's all over the place. It's crappy. It's not fun to be in, but I just want to kind of just show you guys a minute by minute candle. You can still find stuff in there. So ideally you want to see this. If you miss this opportunity to get in here, so let's just move. This is where you run the risk of if it comes back to that fair value gap on the downside, grab it, and you're risking more for your fail safe then. If it breaks this breaker here on the downside and trades back into it, there's your other opportunity to get in on a short. So this is an opportunity to pay yourself. Now I'm going to chase this sucker because I don't want to see it come back up into here. I want to see it break through here some more, because this is the fair value gap. You kind of do your trailing stop loss behind you, or your fail safe. You'd be moving it to the next one down below you. So mine, unfortunately, is right where I entered. So I don't want to see it enter that again. I want to see it start to really push through here now on the downside. And if it takes me out, then it takes me out. We haven't validated this candle yet, so I'm looking really here. Pay yourself that first one here. So I will take one and I will buy one. Oops. Just buy one there if it doesn't take me out already. Okay, now I'm going to move that into profit because I don't want to see that come back up there. So $60 doesn't matter. I don't want to see it revisit. I just want to see it start to push through this. I don't want to see it bouncing around inside here now. I want to get through this fair value gap. That's not a good sign. Start pushing. Come on. Okay, so there's the first one. Now I'm going to move this right to the top of that one because I've got one right here now. And that's how you can make a couple of quick bucks. And if it turns against you, then it turns against you. Oh, the rejection block. I didn't take a piece there. The rejection block. Here I am preaching to you guys about take the rejection block, and I did not take it right there. See how that does not take out the lows? It came all the way down, just clipped it, and you come back into the order block, and we're now back up on top of this guy here. So if you want to do the buffering, you rinse and repeat. Come back up into here. Oh, right there. So you just bought yourself a little bit of so the $160 I made on the last one, it will buffer this here. So if I fail, this one fails right now, I'll either take my stop loss, oops, which is right there. So my fail safe is going to kick in here now. I want to see this just start trading back down now. I do not want to see it run back up into here. I will allow for the mean threshold of that, and there's a little imbalances and stuff, so I really wouldn't want to see it go up any higher than that. If I start to trade through into the rejection block, I'll close it out before it takes the high. So how you see how that little buffering I did in here kind of will save you a little bit. So now it's made its little rundown. I don't want to see it get any lower than that or any higher than that. We're still below. We've buffered, so now you're up some extra cash now. So I don't want to see that. If it runs back up through here now again, then I think it just pays for itself. That trade, it's $5 or something. Okay. So yeah, I don't want to see it come back up there again. There's no reason why it should have to come back up there again, unless it's just coming into this order block here. So we'll just see what happens here. And I know this is not everyone's style. This is not everyone's cup of tea, as it were. But it's I'm just trying to show you that if you really look at what price is doing, it is running from one array to the next array. And I didn't see this right here. See that? It's so small. See that fair value gap right there? We've swung below the low. You come back out of it. If we come back into this, you're really between here and here. So sit and wait on something now for it to set up. And I know that's a typical, maybe too small for you. You may go, I'm form fitting it, but there's a swing there, and there's a small fair value gap, and the body broke above it, and we have not come back to it to find support. So now that I see it, I'll have to sit on the sidelines because they're literally overlapping now. From this guy here to this guy here, you're almost inside them. So I'll wait for something more significant to set up. Move to the sidelines now and wait. Let's see what we got here. It's FOMC news. There's a high impact like CPI today. Is it a red impact, Verba? If it's red or orange, it's a higher medium to high impacts. Doesn't have the same kind of kick that CPI has, but definitely something you want to wait for that to happen first before you start committing to anything, and wait for a setup that's cleaner. All this mess that we're in here, you know, I'm just trying to dig out some logical points that they are reaching to, even though we're inside these tight consolidated ranges. There are logical points they're reaching for, and that's all I'm trying to point out here. I'm not trying to prove Michael wrong or anything like that. I'm just staying in a 1 minute chart and just trying to read from one array to the next array, when it branches out, when it changes. And there it is right there. See that last 1 minute came right back into it, and I didn't see it because I was too busy yakking. So here's the reversal. Told you, hey, look, I'm changing my mind. I'm going long. It came back in there, and I was talking about it before it hit it. So it's hit it now. And now look at that. You see that nice little punch up above here and here. And now we're getting into that range. So you can see the reversals happening before they happen. And if you really dig into the charts on the 1 minute, you'll see them switching back and forth, and they give you these little telltale signs that they're reversing. This one here told you we're going back up. This one here told you was going back down. This one told you reprice, rebalance, it's going back down. Trying to find one in here. There's nothing in here. It's a retracement. This was the retracement back in at 50% of that range, I think it was. One more time, running on these people above the market. Those who wanted to go short here, they're just running them out one more time. Like Michael says, if you don't get that opportunity here, and it didn't continue on the downside, and you saw that reversal happening, and you saw body breaking above it, you'd be out. Your fail safe, if your stop loss is sitting here, and that was your reversal right here, the body broke above it, you get an opportunity to get out at maximum profits right here, and then you wait. It wicks down below you, wait for a setup to happen, and then it continued back, finally went back higher. So as soon as it breaks that high, if you decide to go long there, your stop loss is here. It would have got taken right there. You definitely would have got taken out. Like you say, you're not going to get 100% of the trades all the time, right? That freaking statement's pissing me off, so I'm going to remove that statement because it's bugging me. We might reverse here at 50%. Darren, are you using MT5 or MT4 for trading platform? I'm using an MT5 platform to trade my funded account. And I'm not, I'm using a paid, I paid for live streaming on Telegram. So you guys, or not Telegram, TradingView here. So you guys have actual accurate data. You know, guys, Darren mostly reads charts, and it's by his mistakenly. I don't know what that means either. So if we're going with Michael's idea of, so basically right now you're inside this bigger range here. And if this was the reversal that gave you the idea that we're going to continue going back up, then for me, I'm trading up to this one again. If you got long here off of this inversion, or sorry, this, it's an inversion, but it's also a reversal below this low. If you got long there at 100%, look at that, that's perfect place to put your fail safe. And it came down, tapped you, give yourself a little bit of spread, because that might have been just a kiss there and not get you in, like we've seen several times happen already. So that reversal gets you in long. You're aiming for your first rejection block, old high. And then if you leave a piece and you're moving your stop loss up, or you move your you're playing your fib tool. So if you're in on this one here, 50%, move you to break even. If you're at 62, move to 50. That hit 70, move to 62. So you're right here right now. So just imagine that your trade is sitting right there. If you take these, and I've showed you a few of them this morning already that I've been taking. So if you took that one, which we talked about before it happened, I'm not form fitting that. It's not hindsight. Now watch, now you would have been taken out right there. Now, if you're scaling out a portion on your way up and you hit that, you would take a portion off there as well. So every time it hits a new level, you take a portion out and then move your stop loss to the previous one. So if that reverses there, you would have maximized your profits right at 72%. So if this is an optimum trade entry reversal, then you would have caught maximum profits there. Again, we're still inside a crappy trading environment, but you're still able to haul some pips out of there. There's still logical places that you can enter in with absolute precision, even inside this mess. You can still find some. Now, aren't you glad you took out at your 75%? Well, that's a classic example of pulling a fib tool, save yourself to scale out your profits. And you've got that stop loss moving up behind you, and this right here is a classic example of if it comes ripping back through you, you've got protection because you've moved your stop loss up to the next logical fib level. This isn't luck. This isn't, we showed you this multiple times. Now you're in lunch hour, so, or no, we're at 1 o'clock already now. Lunch hour takes the high. There's another one. Just missed this one. So look for I'm going to give you an opportunity to get on now. There's the fill of the fair value gap here. Now, if we can get back up into this breaker here, if not, this could be just a big run down now. Michael's been calling for. So the reversal tells you we're heading in the other direction. You don't get an opportunity to get in here. It runs through the second one. Right here, that's your opportunity to get in there. When you have one candle ripping through all of them, I guess the new rule that we're kind of looking at is that if you have one candle that rips through 1, 2, you take the last one that it goes through, catch that one for the short, because there's purpose. Again, that's not a Michael trait. That's not a Michaelism. That's just something I've been looking at for something I consistently start to see this run on these fair value gaps. And if it just runs with one candle and runs through a bunch of them, take the last one to go short instead of waiting for it to come all the way back up here again, because it's got intention. Taking the lows out now. Now, wouldn't that be annoying if that came all the way down here? People start to get short on that. And then it ran all the way back up and took these guys out again before finally running down there tomorrow. Like really shake people off here. I quickly run down all these people that were short up here. Their liquidity was sitting above the markets here. And these guys who want to go, they're finding this is engineered liquidity to go back long again because they keep seeing that huge fair value gap sitting over there. We're pairing them up with these guys. If this just turns around here and runs all the way back up again, which I don't think it will, but I find that kind of interesting if it did. Keep your eye on that little fair value gap down here Michael was talking about as a downside objective. If you haven't paid yourself here, mind you, if you saw this and got in here, good for you. I caught it after the fact, so that's your opportunity to pay yourself at these rejection block, equal low, rejection block. Have we hit that one yet? Nope. Almost. Carrot motivator. Ugh. The 10-year bond auction is at 1 p.m. Well, if you caught it from the top there, follow, good for you. I hope you're trailing your stop loss accordingly. If you are, or you've got a nice way to manage your trades. I hope that's working out for you. So look for this the next rejection block here. Hit the rejection block perfectly right there. See that? Right on the money. And sometimes you don't get the low and you get this pullback into this range and you just go, oh my God, it did not take those lows again. Just the engineering that higher, it just literally ran all this engineered liquidity they did here. They just took it out on the way up and we still were able to get in and snap a couple of rejection blocks out of here. And then you see the reversal and we trailed our stop loss up. We got the maximum 75% of our trade. And then all of a sudden it slammed against us, showed us that we were reversing direction, opportunity to get in. If you saw it, I didn't. So it's right here, opportunity to get in short. Again, you pay yourself here and the lows and that rejection block over there. If you're scaling out, now if this pulls back into here and runs back into the range, you'll know why I harp over and over and over again about the rejection blocks. And I'll be cutting it short shortly. I have people coming in to put in a countertop. So hopefully you got to see some of the logic that I was thinking about this morning, despite what Michael was saying about the markets and how consolidated they were. My model is I really love to watch the 1 minute charts, and you can still find opportunities inside here. I know it's not his style, but it is his material. It is his techniques of staying on the trade. It's just not a specific model. I'm just trying to show you how the arrays are still, even in all of this mess, are still running to logical levels. That if you did take a trade, not that you a super sniper or crazy, you know, I want to do 100 trades in a day, or you like all the stress or any of that stuff, just trying to show you price. I'm reading price action. That's all I'm doing. Whether or not you take trades is entirely up to you. If that fits your model, I'm just here to show you how price action moves from one array to another array. And if it helps you to redefine or helps you to zoom in on your model a little bit more efficiently, then I'm super happy for you. You don't have to trade all these things that I'm doing here. I'm just, you get confident after you see them enough times, you'll get to see where you think the arrays are gonna run to. So this is that reversal, the rejection block we were talking about potentially happening. Taking out that, taking out this, then pulling back into the range again. So for me, if this reprice, oh, it does. Okay, that would be a long here, but there's a fair value gap there. So I'd give that all the way down into here as a one. Yeah, that would be a, and you do your, I'm going to give this one a little. I'm basing this on this reprice rebalance right here. If it doesn't go any lower than this right here, then that stays open and continues push higher. That's okay too. This is my fail safe here. My stop loss would go down here. Not that you have to take this trade. You're not. I'm just showing you, just playing here with a demo account, showing you I'm explaining my trade, explaining why I want to take the trade, where it would go. There's a logic. I'm not just aimlessly throwing freaking trades at this chart. I'm just trying to read the price action and show you where it would work. So there's your reprice rebalance. You come back into it. You got a perfect entry here for long. I wanted to get this guy here. It didn't take it, so no big deal. Still doesn't deny the fact that we have a run. So pay yourself here and here. These are real quick entries and exits. Look for your fib tool now. Pull your fib tool from high to low. And if you can make it to 50% of the range. See, when you're in here and you pay yourself a here and here, and if it comes back into there again and you load on again, that's buffering. That's what I call buffering. not Michael's. That's just a term I gave it for buffering. If it's going to take a run on you, you're cutting down the amount of pain you're going to endure if it rips through you again, because your stop loss has to go down here. So if it reloads on again, you've paid yourself, it's got some money in your pocket, you get to put your trade on, start all over again, put your trade on, and if it works, you pay yourself at this one, and if it comes back again, you pay yourself at the next one, and so on and so forth, until it finally reaches your objective, which would be up here inside this range, or 50, 62. Just like we did on that one up there, you'll do the same thing on this one here to catch it on the way up. And again, just kind of put a bar in here, like I used to call these things sticks. Just put your sticks in here. Put a stick on there and say, okay, if I'm in this trade, I'm going to trail my stop loss up to here, and just kind of pretend like you're moving a stop loss up. You don't have to trade any of this stuff. Just watch it. Just watch price action. Boom, boom. Do you see how this makes a lot of sense? So you'd be trailing up to there. You would have paid yourself a portion off there. Stop loss would be right here, right now. So you're already in full profit. Whatever you have left, if you're a maximum, if you put 2 lots on that or 1 lot on that, you still got 1 whole lot at 50% that you're in profit in. If you can't scale out anything, then as soon as that hits 60, you can take some out there, or as soon as it hits 70, take some out there, or just keep moving your stop loss here. So let's just pretend it's still sitting at 50. Oh no, we talked about this, didn't we? Yeah, so there's your objective hit right there. Done. Dusted. Out, move to the sidelines and wait. If you want to leave a piece on for a higher objective, but I think that's good right there. It's a 62% optimum trade entry retracement. Now, if that hammers back down again, that's awesome. You would have paid yourself in a bearish bias inside a range. You traded something real quick, and well, there you go. So if you still sat at 50% and it didn't come down and take you out, and it just hit 70, you'd move to 62. And if it hits that 75, you move to 70. And you see how it gets closer and closer. Eventually, it's going to come back there. Now you right there, you're at 70. And if it pushes higher, if it gets to 79, now you're at 70 right there. Bang, you're out. So you move it all the way up there to 75%, and that was your maximum. So if that reverses here, you're laughing. So hopefully you get to see. That's the joy of watching reprice rebalance, getting an opportunity to get in at like precision. I wanted this, didn't get it. Now you get the order block. Now start running for that stuff up there. If you stayed in this and you just kept running it, you got in right there. That was the hallmark sign. I tell you, it happens all the time. If you just read the price action, you can stay on this horse. How many times could you stay on this horse? And I've pointed out where it turned, where to get in, all through this crap. And I told you how to stay on the horse here. So with that, I kind of hope, oh, is there no sound? Oh no, there's sound. Today is definitely hard. I agree. Today is hard. No sound. I don't know what you mean by that, Jamie. It says that I'm still I didn't turn my sound off. My sound is still, excuse me, my sound is still on. Isn't that interesting, hey? We're calling for this to happen. When this was happening, run back down, take these guys out. And then we were talking, as it was coming down here, we were saying, hey, look, wouldn't it be funny if it just turned around and went all the way back up? And look where it turned around on, right on, perfectly on that rejection block. I'm telling you guys, that rejection block, pay yourself at rejection blocks. Those of you who didn't, and you were expecting that to run all the way down to the big objectives that Michael was outlining earlier today, just got your ass handed to you. It just came all the way back and took your stop loss out. And I'm sorry that happened to you if it did. Stick around, sign up, subscribe, whatever you want, or just pop in if you don't want to subscribe. Just pop in every day and watch how we read price action and how to stay on the horse and how that fail-safe, when it's wrong, let's say right here, some reason you decided you want to go short right here, and it came up and it popped through there, right through there, you go, ooh, that's not a good sign. Your fail-safe says my stop loss goes here. If I'm going to go short here, my fail-safe, I'm entered in here for a short, let's say, and you wouldn't not on this guy. But if you did, and you got a short there, and you know where you say you can't always pick the highs, you can't. So here's a situation, you go, I tried to pick the high, the perfect entry. It didn't work. So it traded up, did not take out my stop loss. This candle opened, traded back to you right here, and your fail-safe broke you out at break even before it took your stop loss. That's why my concept of the fail-safe as just something I codified. It's not Michael's thing. It's just something I came up with. But I tell you, it saves your ass if you're on the wrong side of it. If you recognize that price is still moving against you, here's your opportunity to get yourself back to break even, or even say, oh, I'm going to go long. If you really got the courage to recognize that that PD array has been hit, and you've gone through it and we're still going bullish, then you can get in and say, I'm on the wrong side of that. Not only can you break even, you can start going long again. And as soon as it breaks that high, pay yourself a piece. Move to break even and wait in case it just turns around and rips back against you. Again, that might be not your trading style. You want something a little more robust than that. You want something that's not quite so twitchy, and that's fine. That's just the way the price action is in that particular area. It's twitchy. Otherwise, it's not. In here, this was beautiful. And you would have just capitalized on almost 100 handles right there, just in that little run. In a crappy environment like today, look at that mess. But we've stayed on it since I got on an hour ago. In here, I've showed you how to stay on the horse all through all this. Just by reading price action. Not that you're actually trading, but how to stay with the price. And where is the logical place where it turns? Where does the charts show you that, hey, look, I'm continuing on here, or hey, I'm doing a quick reversal. Stay on. I'll give you one opportunity, get on me, and then I'm out. You know, jump on the horse and away you go. As soon as you see that reversal starting to happen. And stick around, you'll see it happening over and over and over again. And it's just that telltale sign that says, I'm reversing now and I'm going back the other way. And then if you have your fail-safe, you use your fail-safe as a trailing stop loss. And if it's new to you guys, go to my video on the Weekend Breakfast Club Special Edition fail-safe. I tell you all about how to use it and how to work it in multiple different scenarios, and how to use it as a trailing stop loss versus a fixed trailing stop loss. Look at this guy. Come back to the breaker right here. So even if you got out here and you said, I don't know if this is going to just run up to a rejection block and leave on me, just say, okay, well, wait for it to break through. And if you get a big bold candle that breaks the upside of this, when it returns to your breaker, you can go long at that point. And your fail safe will sit just below this point right here. So here's your invert, but you have an inversion happening now. Sorry, you have an inversion happening right here. So you wouldn't use it now. Forget the breaker. I'm just seeing this now as the reversal. So now you look at this guy right here. So it's just reversing direction on you now. So now I'm bearish, not bullish. It wasn't until I just suddenly saw this go here and go, oh yeah, we're definitely going short now. Body breaks below it. It gives you the hint we're going low. It did not give you an opportunity to get short on that. So you wait. Now you can trade from premium to that discount one again. Or pull your fib tool here. If you manage to get in on that, which you didn't, because unless you're on a 5-second chart, there might be something down there to see. Keep your eyes peeled for this area down here. This fair value gap, this one down here is the discount array. Pull your fib tool. It's a rinse and repeat all over again. Sorry, it's starting to bore you guys, but it's a rinse and repeat over and over and over. So if you did get in on that, you're going down to 50%. Move to break even, pay yourself a piece, and just start moving your candle. If you're into fib to me, and you're going to take those and pull your stop loss down accordingly. Just leave your full trade on, and you're pulling your stop loss into break even. You're pulling it into a little bit of profit. Always pay yourself a little piece at the first one. Otherwise, you're just going to break even, and all you're going to do is come back if it takes you out, and you go, oh, I missed that big chunk. Because notice the difference between your entry and 50% is a lot of lost profits. So pay yourself a piece there and move to break even. Then when you go to 60, now you're starting to really grab some profits, because now as you start to go down, you're going to start to collect tighter and tighter and tighter until it finally pops back and takes you out. So there's 50, you'd be moving to break even. Again, we didn't get an opportunity to get in there, but I'm telling you, that's where it turned right there. We're moving back into the range. So we're into the discount array right now. This can turn around and go back on you. So pay yourself at the discount array, 62% almost. If that rips up against you now, you'll wish that you would have paid yourself at the array that's in the discount, that lines up with a logical level. You may not get that, but aim for this. That's why you have to understand your PD arrays, what a fair value gap is, why it's important, and how you can, if it lines up with an area that you're looking for support at, pay yourself there. It still hasn't come back to break even. It still hasn't hit 62. Now it's hit 62, moved to 50. So you pay yourself a piece there. Now you can do that by just dropping in trades in here. You'll put like a sell or a buy and a buy, 1 1 1. If you've got 5 on that, you put 1 there, moves your stop loss to here, take 1 there, move your stop loss to wherever. Right now we'll say it's at 50%. Oh, now you paid, now it's 62. Wait. See how we've done this rinse and repeat 3 times now? Get ready to bang. Now you're moving to 70%. If it comes back and takes you out, if it hits at 6 right there, it just took you out right there. Now, if that's an optimum trade entry, you just maximize profits like you did over here when you maximize profits. We're still reversing. We've took out all the way back up into rejection block. Oh my goodness. Can you believe that? We went from like array to like array inside a range. Rejection block to rejection block. Oh man. I love it. All it's doing is just reinforcing the narrative. And see how we've come all the way down into this area we talked about when it was up here. I told you about it would come back into here, and there you go. Done and dusted. Anyway. Hopefully you got to enjoy a little bit of something there. I'm signing off for the rest of the day. People should be here shortly. So I hope you enjoyed this morning or afternoon session, and you got a little something out of this, even though it was not that I wanted you to get any profits out of it or anything, but I just wanted to show you that even despite all this crap that we see here, the algorithm is still moving to specific PD rates. And if you study them carefully and you watch every minute of the candle, even in this, if this doesn't validate for you on how to stay inside inside the algorithm, stay on the horse, if I haven't shown you just in these 1 minute charts inside this mess how to stay on a horse, I don't know what more I can do to convince you, but it's pretty solid as far as I'm concerned. So I hope you enjoyed that, and I will see you guys tomorrow, and we'll see what Thursday provides. If we continue to go sideways here, we may get a run back up above these old highs, dig deeper into that 50% of that range that Michael was talking about for the regular trading hours, and then you see a big hammer down to take out the rest of the because this is just classic beat the crap out of people. You run them up, you run down, they all think they're going to go short now, so they're all trailing their stops. You just keep running it, all of a sudden slammo, you go up against them, you take them back out, you clean these guys out who wanted to go long because they all thought this is just so beautiful on how to take out people. It just looks like logical to me. So anyway, that's it for me. Thanks for tuning in, you guys. I appreciate it. Sorry, I was a bit harsh there. I don't like people telling me what I can think and what I can't think, so I apologize for that. Shouldn't be so sensitive to other people's opinions. But anyway, I appreciate you guys popping in, and all 33 of you that stuck around today, thank you very much. I hope you had a chance to learn something, and if you did, hit the like button, and if you really enjoy what we're doing here, subscribe. You can join our Telegram channel. Just go to the description above. You'll see the links in there, and you're more than welcome. We welcome you all into the Telegram channel, and we have chats there after hours. When I'm not on here, we will meet up in there and we'll discuss many things about the markets. So with that, I will see you guys tomorrow. Thanks very much again, and